G'day mates. Today, we'll be taking an exciting journey to unravel the fascinating tale of India's economy. We'll dive deep into its history, sectors, policies, and challenges, exploring how the Indian economy has evolved and its impact on the global stage. So, buckle up and get ready for a ripper of a ride. To kick things off, let's start with a more in-depth history lesson. India has a long and colorful economic past, dating back to ancient times when it was a vital hub of global trade due to the Indus Valley civilization. During the Mauryan Empire, India's trade extended as far as Rome, with trade in textiles, spices, and precious metals. Fast forward to the British colonial period, and India became the world's largest exporter of textiles, particularly cotton. However, colonial policies eventually led to deindustrialization, the destruction of local industries, and a weakened economy. India's share of world GDP fell from an estimated 25% in 1700 to just around 4% in 1950. After gaining independence in 1947, India embraced a mixed economy model, focusing on import substitution and self-reliance. This period saw a focus on the public sector, with large-scale industries and infrastructure projects under government control. However, this system led to inefficiencies, lack of competition, and slow growth. By the 1980s, things were looking a bit dodgy, and India faced a balance of payments crisis, ultimately leading to economic liberalization in 1991. This marked a new era of market-oriented reforms, foreign investment, and export-oriented growth, with policies aimed at reducing government control, opening up to global trade, and fostering the private sector. Oh, what does India's economy look like today? Well, it's as diverse as a plate of curry, with agriculture, industry, and services playing a vital role. Agriculture still employs nearly half of India's workforce, but its share of GDP has declined to about 17%. India is the world's largest producer of milk, pulses, and jute, and the second largest producer of rice, wheat, and sugarcane. The industrial sector contributes around 28% of GDP, with manufacturing being a key component. India's automotive industry is the fifth largest in the world, and its textile industry accounts for about 5% of global trade in textiles and apparel. However, challenges like outdated infrastructure and low labor productivity persist. The services sector, including IT and ITES, is the real star performer, accounting for about 55% of India's GDP. The IT industry has put India on the global map, with a 7.7% share of the global IT market and employing over 4.36 million people in 2021. On the global stage, India is no small fry. With a GDP of around $2.6 trillion in 2020, it's the world's sixth largest economy. However, compared to the big guns like China and the United States, India's share of global trade is still relatively modest at around 2.5%. Let's talk about India's not-so-secret weapon, its people. With a population of over 1.3 billion, India boasts a young and diverse workforce. The median age is just around 29 years, offering a demographic dividend that can propel economic growth. However, India's total fertility rate has declined to 2.2 in 2021, signaling a slowdown in population growth. The country faces a high unemployment rate of around 6.1% in 2021, and a significant portion of the workforce remains in the informal sector. To tap into its demographic potential, India needs to create more jobs, invest in skill development, and improve labor market efficiency. In terms of global competitiveness, India ranks 48th out of 141 countries on the Global Competitiveness Index in 2019. While there's certainly room for improvement, India's robust labor market offers both opportunities and challenges for the future, especially in terms of skill development and job creation. The Indian government has implemented a fair dinkum of policies to boost economic growth, including Make in India, Startup India, and infrastructure projects like the Bharatmala Pariyojana and Sagamala project. These policies have helped attract foreign investment, foster innovation, and create millions of jobs. India's trading relationships are as tangled as a bowl of spaghetti, with a mix of imports and exports playing a vital role in its economic growth. For instance, India imports crude oil, which accounted for about 22% of its total imports in 2020, and machinery, accounting for around 12%. These imports are then used in the production of goods that are ultimately exported, like textiles and pharmaceuticals, which together accounted for around 12% of India's total exports in 2020. In 2020, India's top export destinations were the United States, the United Arab Emirates, and China, while its main import partners were China, the United States, and Saudi Arabia. These trading relationships contribute to India's integration into global supply chains and its overall economic growth. Now, let's dive into India's monetary structure and its pros and cons like a platypus in a billabong. India's central bank, the Reserve Bank of India, (RBI), plays a crucial role in managing the country's monetary policy and financial stability. On the one hand, the RBI has been successful in keeping inflation in check by targeting an inflation rate of 4%, with a tolerance range of 2% to 6%. In 2021, the inflation rate was around 5.6%, within the targeted range. This stability is essential for a healthy economy and maintaining the purchasing power of the currency. Additionally, India's managed floating exchange rate system allows for flexibility in responding to external shocks and maintaining competitiveness in global markets. This system prevents extreme fluctuations and helps create a more predictable business environment for international trade and investment. On the other hand, India's monetary structure faces challenges like slow policy transmission, which means it can take time for changes in monetary policy to affect the real economy. This can create uncertainty and hinder economic growth. Moreover, India's economy remains vulnerable to external shocks, such as fluctuations in global commodity prices and changes in international financial conditions. The monetary structure and policies must navigate these external factors to maintain stability and growth, which can be a daunting task for policymakers. Crikey, we can't forget about the elephant in the room, or in this case, the virus in the economy. The COVID-19 pandemic has had a significant impact on India's economy, just like it has on the rest of the world. So, let's take a squiz at the effects of this global health crisis on India's growth and sectors. During the early stages of the pandemic in 2020, India's GDP contracted by a whopping 24.4% in the first quarter. The strict lockdowns implemented to curb the spread of the virus led to widespread job losses and severely affected small businesses, especially in the informal sector. The agriculture sector was relatively resilient, as food production and distribution were considered essential activities. However, logistical challenges and labor shortages disrupted supply chains and hindered growth in the sector. The industrial sector, including manufacturing and construction, took a hit as factories and construction sites were forced to shut down during the lockdown. While the sector has shown signs of recovery, it continues to face challenges related to supply chain disruptions and reduced demand. As for the services sector, the pandemic was a double-edged sword. While the IT and ITES industries flourished with the increased demand for remote work and digital services, sectors like tourism, hospitality, and retail were severely affected by lockdowns, travel restrictions, and reduced consumer spending. To combat the economic impact of the pandemic, the Indian government rolled out various stimulus packages and relief measures, including financial support for businesses, increased healthcare spending, and food assistance for vulnerable populations. While the road to recovery might be a bumpy one, India's economy has shown remarkable resilience in bouncing back from the pandemic. With continued efforts to adapt and innovate, India's got a fair crack at regaining its economic momentum in the post-COVID world. So there you have it. We've taken a whirlwind tour through India's economic landscape, exploring its history, sectors, policies, and challenges. With its vast and diverse population, India has the potential to be a major player on the global economic stage. But like a game of backyard cricket, it'll take a mix of good strategy, teamwork, and a bit of luck to hit that sixer. Thanks for joining us on this epic journey, and we hope you've enjoyed learning about the ins and outs of India's economy. Until next time.